Welcome back, traders. Today we will understand how you can approach a gap trade. First, we will understand what are gaps, how you can plan our trade when market opens gap up or gap down. And then I will talk about the psychology of buyers and sellers in the market when the market happens to be in this scenario. And we will discuss the price logic, why you should plan your trade in which direction. And finally, we will be referring Nasdaq chart for our reference. I will start with, what are gaps? So there are only 3 cases in which a market can open the next morning. The first one is flat opening. Second one, gap up. And third one, gap down. Right? So what is flat opening? Suppose on previous day there is a green candle. This one is a green candle. It has its close, open, low, and high. It has a close around $100, right? And the next morning, it is opening near this area, means near $100. It may be $101, or perfectly around $100, or $99, means closer to this previous day close. Then it will be termed as a flat opening. If the market is opening flat here, then what will be change in sentiment in the market? There will be no change in sentiment. No shift in market sentiment. It can go in continuation, or it can also reverse based on the price action. Now we'll see what we call a gap up. Previous day market closes at $100, and next day it is opening above the previous day close with a considerable gap. Suppose it is opening at $105, right? And there is a significant gap between the previous day close and today's opening. So this will be a gap up. When we talk of gap down, then suppose the next day market is opening around this level, means below the previous day close. This is the previous day close, and today market is opening at around $95, means below the previous day price level. Then this will be called a gap down opening. That means there is a shift in market sentiment, and now the market sentiment is negative. Now we will see how you can plan your trade based on the previous day candle. Previous day candle can be of 3 types. First, there may be a Doji candle. Then there may be a bullish candle. And third, there may be a bearish candle. All right? So we'll discuss them one by one. This one will be our first case, second case, and third case. So let's get started with the first one, and that is our Doji candle. Suppose this is a Doji candle forming in the market. This is a previous day candle on daily time frame, and the candle is also called a neutral candle, as there is no clear winner in this case. It is very important to understand who will be holding their positions. In this case, both buyers and sellers will be holding their positions. Here, both buyers and sellers are present, right? When I'm saying buyers, that means either call buyers or put sellers. And when I am saying sellers, that means either PE buyers or CE sellers. In this case, if the market is opening a gap up around this level, this is the close. There is a shift in sentiment that will be a positive sentiment. I told you earlier that both buyers and sellers are in market. Overnight, buyers who have been holding their positions, they will hold their position, and the sellers who have been holding their position will try to cut off their position or will reverse their position. That means they will also become buyers. And if the price action like this is forming here, then it is planning for breakout. And there is also a good place for putting your stop loss, that buyers will put their stop loss on the day low, and then they will plan for breakout. So if the market is opening like this in a Doji candle structure, You can plan for the breakout, and you can plan to buy on the breakout. Right? So this will be our first case, means buy if market open a gap up. This is for Doji candle, right? If the second case is a market opening a gap down, so what will be the case here? What will be the change in sentiment? The sentiment will be negative. Negative sentiment will be there, and the buyers will cut off their position, and sellers will hold their position, and more new sellers will join here, and they will plan for breakdown, right? They'll put their stop loss here above the candle high, and they will plan for breakdown trade. So, what is the second case? If the market is opening a big gap down, then you have to go for selling or breakdown, right? I'm not saying that it will be working every time. Nothing is 100% certain in the market. You have to keep it in mind. So we will be putting our stop loss to cut our losses when we are wrong. What you need to do, if the market opens a gap up, then you have to look for the buying opportunity and go for breakout. If the market opens gap down in Doji case, if the previous day candle is Doji candle, then you have to go for breakdown, right? This was the first case. Now we'll talk about second case. Suppose the previous day was bullish day, right? If the bullish candle is there, so it will be open, close, high, and low. And if market open near this level next day, then there will not be any change in sentiment in the market, and it can either go for continuation or it can reverse based on the price action that is forming in the market. What if the market opens a big gap up in this case? Suppose the previous day it was a 200 points move in Nasdaq, and next day the market is opening a gap up around 80 to 100 points, right? If the market is opening a big gap up, then what will happen? Some of the buyers will be holding their positions and they will be looking for more profits. And if the market opens a big gap up, then they will have a big profit overnight. And if they see here price action, anything like that, it is coming down. Then what will they do? They will square off their position. They will book their profit, right? They will book their profit in this case, because if the market start coming down, then they will fear to lose their profits. So they start booking their profit, and that will result in selling. We can plan for reversal here, right? You can plan for reversal. If the market is in bullish trend, then it can come for selling, right? So what was the case here? Buyers will book their profit, so they become sellers, and more new sellers will join here. That will result in a big and quick momentum to fill the gap. This is the psychology behind the gap filling as well. As the overnight buyers will book their profit, it will result in selling, and that selling accompanied by the new sellers will result in a quick momentum that will fill the gap. So what we have to do here? The first case will be when the market open a big gap up on bullish day. Then you can plan for reversal simple. Again, it will not work 100% of the times, but 60 to 70% of time it will work. Second case will be when the market is opening a big gap down. Means suppose the previous day close was here, and it is opening near this level, around 50% of the previous day candle. It is opening in negative sentiment. You can directly enter for a big downward trade, means big selling trade you can plan here if the market is opening near this level, 50% gap down on a bullish day. So here also you have to plan for continuation in direction of gap that is selling. In the first case, it was a big gap up. Gap up means the positive sentiment was there, but it will reverse due to profit booking. So it was a reversal trade, right? In second case, market was big gap down. That means there is a change in sentiment that is a bearish sentiment in the market. So you have to trade in the same direction, means trade for continuation. We will be selling in both the cases, but one will be for reversal and another will be for continuation, in the direction of gap. This was the second case for bullish previous day. Now we'll see third case, that is case 3. Case 3 will be bearish previous day. Same psychology prevails here, right? If this is a bearish candle, this will be open, this will be close, low, and high. Suppose in this case, the market is opening a big gap down. Again, the same psychology prevails. Overnight sellers will have a big profit on the next morning, so they will book their profit next day, and that will result in market moving upward, and it can come for gap filling, right? So what you have to do, we have to look for buying opportunity here. If the market is making a price action like this, or any buying price action, candlestick or indicator, if you are using for buying, you can plan your buying here. That means it'll be our first case for reversal, and you have to look for buying here. And again, if the close was there and the market opened a big gap up near this area, then here we have to go for continuation in the direction of gap. In both cases, we will go for buying, but in one case it'll be for reversal or gap filling, and in another case it will not for gap filling, it'll be for continuation. It will be our third case. Now let's summarize the whole trading setup. First case was a doji candle. What you have to do, first scenario, if the market opens a gap up, go for breakout buying, and if it opens gap down, then go for breakdown selling. In second case, we have bullish previous day, right? Second case was a bullish previous day. So in this case, if the market opens a big gap down, then we have to go for continuation selling. Selling means like this. If the market is opening near this area, close was this, and market opening here, so you have to go for bearish trade, right? And in second case, if the market opening a big gap up, then we'll be going for a reversal selling. What will be that case? This one, like this market opening here, you can go for this like trade like this, okay? Now the third case is bearish previous day. In this case, if the market is opening a big gap up, then we'll go for continuation buying like this. Suppose this is the previous day, this is the close. So gap up, then we'll go for continuation buying like this, right? If the market open gap down, then we'll go for reversal buying. These are the things you have to keep in your mind, and you have to plan your trade accordingly. Now we will look at some of the similar trades on Nasdaq chart. This is a Nasdaq chart here, so you can see Nasdaq chart in 5-minute time frame. I will first change it to daily time frame. So let's do it. Select the daily, and then here you can see it was a big bearish day, and the market opens a big gap down, and it continues in same direction because there was a negative sentiment due to tariff war. So in this case, you cannot plan your trade, and if you have planned for gap filling, then your stop loss will be hit, all right? But the next morning, as you see, the previous day was a bearish day, and the market opened a very big gap up, right? Gap up. And what I told you earlier that in the market, if the previous day is a bearish day, and the market is opening a big gap up, then we have to go for continuation trade. That will be in the direction of gap. We have to go for buying, right? If we zoom it on 15-minute chart, I can show you here you can see it was a bearish day, and then market opens a gap up. Like this is a huge gap, and the market start moving in its direction. You can book your profit inside 30 minutes, right? In morning, we generally trade for a scalping, or we go for 1-minute time frame for our morning trade. So you can get a very big profit in the morning itself. All right? It was the case of previous day was a bearish market, and then gap up, and the market moves in its direction. Next, here you can see this was a big bullish day, all right? Bullish day, and there was a huge gap up opening, all right? This is huge gap up. So if you remember, what should be our plan here? If the market is bullish and it opens a big gap up, then you have go for a reversal selling, all right? So you can see it is a big gap up, and it just reverses with the big candles. So see, if you have entered here like this, you can get 170 points till the gap, all right? And further, if you trail your stop loss, you can get a very big profit here. So you can backtest, and you can plan your trade accordingly by keeping one thing in mind, that every time you can't be correct. So you have to put your stop loss, wait for your setup to form, and then enter trade. This is for today. We'll meet in the next one. Thank you for watching.